Morning all, how are you all doing? Morning. Sorry, a bit late this morning. Trying to get the Telegram link for the channel working. Didn't work. Anyway, it's working now. How are we doing? Morning all. Everybody have a good weekend. Morning Steve, Kenley, Burke, David, Grateful, Virginia, Amy. How are we all doing? Morning from Ontario, Canada. Blimey. Right. Sorry, I've just been thrown a bit because everything went wrong when I was trying to get the stream up and running. One sec. Right, let's quickly cover yesterday or Friday's results first. What's the time? We've got 6 minutes to the open. Quickly have a look at what happened there, and then we'll quickly whiz through the news. So Friday we did 2.87, I think, 2.8%, something like that, across all the strategies. One really good result, one really bad result. So it kind of evened itself out. So this is the ADR reversal strategy. 1.19% banked on Friday, 1.2% in drawdown, 0.4 gained so far today. Pound Swiss has got 5 positions on, but that, if we get a little bit more movement downside on the pound, a little bit more of a push on the Swiss this morning, that'll be banked. So everything's fine on that. There's nothing in drawdown of any description. H1 RSI mean reversion 1.35 or 1.3 banked on Friday, 0.44 banked so far this morning, 4.6 drawdown. That should have been more. Had some drawdown control done overnight, which I'll show you in a minute, which was the broker basically stealing money as usual. Yeah, anyway, New Zealand dollar CAD and Aussie New Zealand, which should have a really nice aggressive drawdown control position in about $700 of profit, but they decided to spread it by half an ADR and take the money. So those two basically are the only two which are in any issue at the moment. New Zealand dollar based still. H4, this is the strategy that isn't doing very well at the moment. H4 mean reversion, just not getting those swings enough to get out of these positions. 2.98% drawdown control done on Friday, 1.37 so far today. That's sitting negative for the month. It is only the 5th of the month, but 10% of drawdown. There's a few bits there over 2%. Main one being obviously EuroCAD's there over 2. Aussie New Zealand. I haven't done any aggressive drawdown control manually. I'm letting this one play itself out to see what happens. But yeah, 4% of drawdown on Aussie New Zealand. H1 hedging banked 3.36% on Friday, 0.33 drawdown control done, 13.39. Only thing in a bit of drawdown on this one is this and this, which is US dollar based, US dollar yen short. There is a position in profit on that one, so any movement today will get out of that potentially. And euro US dollar, so that's got 6 positions on at the moment, being a little bit squeezed, this euro. So we'll have a look at the news in a minute. We should get some movement on that, but yeah, overall profit on Friday again. News today, we've got very little news this week, as you can see. Red news, we got important news, but not masses of it. So we had OPEC meetings yesterday. We'll have a look at oil today as well. So this morning, 7:30, we had the CPI for the Swiss. That came out as expected. That's month on month. Lagarde is speaking this afternoon, and we've got PMIs this afternoon, a half an hour after market open. Tomorrow is the big day. That's the rates for the Aussie. They are looking as if they are going to keep them the same. We will see what happens. The way the Australian dollar's been going, there's plenty of potential for that to come out higher than expected. So we'll see. But 3.85 is the forecast. Low is speaking on Wednesday morning. We've got then the GDP for the Aussies. We've got some Swiss news there as well, but that's not particularly impactful. Then we've got the Canadian rates at 4.5 for the forecast on Wednesday. So Aussie on Tuesday, CAD on Wednesday. Very unlikely we're going to get a lot of movement at the New York Open there, because obviously that's half an hour after the Open. They're going to want to keep their cash tidy, I should imagine. Unemployment claims on Thursday, and then the unemployment rate for the CAD on Friday. So some big news, leading indicators all week, but apart from that, there isn't anything else. So it's big impactive news events or nothing this week, really, basically. I haven't had a quick look over the weekend. I didn't see anything I had a quick scan, but I didn't see anything exciting jumping out at me. From what I could see, obviously it's kicking off a bit in Russia, but we'll see what happens there. So yeah, output targets from OPEC. So there was news coming out on oil, but we need to just see what oil just does what the hell it likes. So we need to see what happens with that this morning. AA minus. Yeah, that was it. That was it. So it's basically oil rated. So let's have a quick look at the DAX. Market's about to open. We have 50 seconds-ish. So DAX, basically, we had a little bit of a gap which got filled immediately. We're sitting straight up at yesterday's high or Friday's high and last week's high at the moment on the DAX. So if we look at it on the hourly from a target perspective, we're right up, as you can see, at Friday's high at the moment, which is previous high from Tuesday in the week and last week's high. So there's a lot of resistance right above us there for potentially coming down to fill that gap. So we got a gap fill to the downside to fill. So we could get a nice looking short run 100 ADR today on that one, but we'll see where it goes at the open. Big old 5-minute pre-market going in. Look. Wow, big move on the DAX. So I'm just not showing us two orders. So I'm just trading on another account manually over here. One sec. So the DAX pre-market has gone long. It's frozen. What the hell? Okay, so that's completely frozen. Right. Great time to disconnect at the open. This is why this strategy, it really needs a solid broker. So that basically hasn't even triggered those long orders. Look, managed to get the short orders on and then disconnected. So when this comes back to life, we'll see whether or not we actually got those orders on. What? Yeah, look. Hello? Okay, yeah, beautiful break to the upside. Market went really, really quick there. You can see by the time that candle closed and the opening range breakout EA managed to get even the high and low of the candles stored, we'd already gone long there. So hardly any any way you would have got that on this morning. So yeah, very, very difficult to get that pre-market today. You wouldn't have got it. This is just not even working. Oh, there we go. Decided to come back to life, have you? Right. So yeah, you wouldn't have got that on this morning, unfortunately. Never mind. Sorry, bear with me a sec. I'm trading this manually as well. I'm just trying to manually adjust orders. Trading manually is really hard. Right. Okay. So DAX, debatable. You wouldn't. I mean, I haven't got it on. So anybody trading this automated, unlikely would have got that on this morning, depending on your broker. But that move seemed far too quick. to get that long on. If you had have got that long on, it wouldn't have been a 1.5 bar, that spike. So that's only 1 R, and it didn't quite get to that. So it's not really a trigger, basically, today. No trade. Right, we'll watch that. So this is your 5-minute opening range going in now. So if you're taking the 5-minute or the 15-minute breaks, then obviously this is where you'll be looking for that break this morning. Morning, everybody else that's arrived that I haven't said hello to. Excuse me. I'm just watching these US markets as well. A lot of volatility in the US market at the open this morning as well. Very big volume gone in on the NASDAQ and the Dow, and it's coming down pretty hard. Got 30 seconds. Let's just watch this candle. So looking at the downside on this today, then, the DAX, it's ADR basically. So you've got pretty much 150 points downside movement to get that gap fill done. So basically ADR, yesterday's low, etc., is the target. So if this is going to be a double top, and as you can see, this has gone straight up, rejected last week's high, limit orders have triggered, they've driven it straight back down again. So if this breaks to the downside, this 5-minute ORB, this would be a really nice short today. So we'll see where this goes. So there's your 5-minute opening range in. There. Right. Let's have a look at FX. So so far there's no ADRs today. Obviously weeklies are dead because it's the first day of the week. There's nothing on the monthlies yet, so we didn't get any big volatility that hit monthly ranges last week, which is good. So yeah, nothing to look at on the ADRs or anything today. All the ADRs that are running at the moment are still playing out. They're all doing pretty well. We've got 1.4% on, banked fair bit on Friday and this morning, sitting in profit at the moment. So just waiting for those all to play out at the moment. Pound Swiss being the main one that we need some movement on. So there's nothing to look at on the ADRs. RSIs, there's a fair bit there. We had quite a lot of movement, obviously, on Friday. So we'll go through all the RSIs this morning. If there's anything else you want to look at that isn't on that list there, obviously let me know. So we're just pushing up a little bit on this inside bar, but it does seem to be rejecting again. So okay. Right. Let's start off with oil. So we had the OPEC meetings yesterday or over the weekend. So this morning we got the gap up on oil, almost up into the previous highs up here, which is the last week's high and the previous week's high. Both of those black lines there, last and previous week's high. So we gapped up, haven't come down and filled that gap in yet, and looks like the market is starting to rally back up again. So potentially this could be the start of a break to the upside. So the outcome of the OPEC meeting, it's difficult to tell what is going on with oil. It's got absolutely no legs at all at the moment. As you can see, it's been in a downtrend for absolutely ages, since May. It's last year. No, where are we? Yeah, it's May last year, isn't it? 22, yeah. So since May last year, obviously, we've been in this lovely big downtrend. It looks like we were starting to put in a rounded bottom. We got this low, high, so we broke structure to the upside, looking for a double bottom bounce. So we're coming up into the area where if we break above there, this bottom here should be really the low before we start to rally. So it all depends. The oil just doesn't seem to make any moves based on fundamentals at the moment. Regardless of what they do with it, it just goes wherever the hell it likes. So it looks bullish, obviously. We looked at this as a trade last week, which was beautiful, played out absolutely spectacularly, and it's still going. And I said, you know, if this is going to be a double bottom bounce, you're at least coming back up to these highs, which is ADR today, and potentially off up to this old monthly high, which is $83 a barrel. So it looks like it's starting to do that, but we are quite extended now. So potentially looking for a pullback and then a push back up to the upside. And obviously we've got a gap here. And as we know, gaps get filled. So at some point, if it doesn't do it today, it may well come up and try and test ADR or just test this last week's high, then push down, get that gap fill done, and then rally from there. So one or the other, basically. Don't know which, but those are the two things that I see playing out on that at the moment. RSI-wise, DAX is just starting to reject quite strongly now. Got 1 minute left on this candle, but if we get an ORB to the downside on that 5 minute opening range, I think that'll be a nice looking short today. It says as it rallies. Wait and see. Right, let's look at the RSIs. So starting off at the top, Aussie dollar yen. We'll look at the hourlies first. So Aussie dollar yen extended to the upside on the hourly. As you can see, we're big, strong 2-day push on this. We had 2 massive ADR days on this. We came straight out of these weekly highs, popped out the top, came back, retested, and it looks like it's pushing again at the moment. So we're really waiting for some yen strength to come through at the moment. If you look at the US dollar yen, we started this downward movement, and then Friday it undid 50% of that move. So this looked like we were seeing some strength start to come through from the yen, and they decided, nope, we're off again. So yen's weakened again. So it might be breaking back out to the upside again. So bullish engulfing basically there. Higher high. We'll see. It's not really got any momentum. Looks like it might be one of those days where we put virtually all the volume in the first 5 minutes. It doesn't go anywhere. We'll see. So yeah, so these yens basically weakness again off of the yen on Friday along many lines. So at the moment, it is still pushing. When we get back up to that 140 a barrel, 140 mark for the US dollar, US dollar yen, that is when I think we'll start to see that, hang on a minute, what's going on coming back from the Japanese. So on the financial juice, obviously, we're constantly monitoring to see if there's any mumblings about the potential yen intervention. So basically, if the US dollar yen gets too high, the yen basically intervene and we get a massive strength coming through on the yen and they push it back down again. So that is potentially what we might see. This is going to take any trades today unless it breaks to the downside. I'll take it. So at the minute, we're watching this like a hawk. If we can get up to there, this is within ADR today. If we can get up to there, we might well see over the next couple of days some real strength start to come through on that yen. So Aussie dollar yen extended on the hourly. First position's gone on Friday. So the reversal alert on Friday was in there. That was a reversal alert in there. Came back up and tested. Obviously, it broke down. It's gone sideways since. Yeah, so this Aussie New Zealand drawdown control, by the way, that I spoke about at the beginning. So I had an aggressive position put on here, as you can see. Basically, I had a stop loss up here, which was around about 0.7%. So one sec. Deal with the trade. So yeah, I had that stop put on up there, and basically, as you can see, the market closed there on Friday. They opened up down here this morning, spread it all the way up to there, stopped me out, and then obviously the market has just been sitting sideways. So good lesson, $750 that cost. Market never went anywhere near it. So that's what happens when you use stops and when you use them overnight. But there's nothing we can do about that. It's a swap. So aggressive. That's the only one of the downsides to aggressive drawdown control. If you have an aggressive drawdown control position that you put on and it doesn't drive straight away, and you have to hold it overnight, especially on a New Zealand dollar pair, you run the risk of getting stopped out, obviously, on the swaps. So so they spread that basically 62 pips. An ADR on this is 73. So it's pretty much they spread it an entire average daily range to take out that. Nothing you can do about it. So unfortunately, that was a loss. So that was that aggressive one. Just reminding me while we're on a Aussie. CAD yen. So big push up on the CAD yen still. Hourly RSI extension. We got extended on Friday. First entry went in. And again, same thing. Yen weakness. We are pushing up again this morning. So maybe another position or two needed on this one. Just trying to see where we're potentially going on this. So we've got this high. Can't see. Got this high up here, which is around about 200 ADR today. So that's your next kind of main area of balance here, which we're just coming into test now. So all these lows in this area of balance here got retested there before it dropped. This is exactly where we are now. So this whole zone here has got a lot of accumulation money, which basically drove down. So likelihood is the market will be watching this level and looking for potentially some drops in there. So we are getting up to level, but there's no real obvious spot where you can call out this is where we're probably going to get a bounce. So somewhere in here, we're massively extended on the 4 hour, as you can see, back up into that sort of territory where we tend to get the drops coming back down again. So we're just waiting for a pullback. Does look like it's starting to rally to the upside. Obviously, this is CAD yen, same as US dollar yen. It is bullish, but we're waiting for some yen potentially intervention on that one. So that's extended on the hourly. Entry was on Friday. Euro CAD is also extended to the downside. First entry gone in on that on Friday as well. Nice extension on RSI. There's absolutely no reason why this euro shouldn't be pushing. We're just not getting any strength out of it at the moment. So basically stuck, but coming up to a very nice level. Let's draw that level on properly because that is a good level. That so previous monthly low. Whoops. So we've got that level there, and then we've got another one coming up down here. So those are the two levels to watch. What happened there? First one, obviously, we're pretty much right at it now, so it's well within an ADR. Second one is 150 ADR. So if this isn't going to find some life and just suddenly start this move on this euro, don't forget we've got CAD rates coming up this week. Then we're looking for a push back down to there to get some kind of bounce. Loads of propulsion gaps to the upside. Obviously, this is where's the Thursday gone? Where are the rates? Oh, it's this one here, obviously. So this was the rate announcement. And since the increase in the rates, this has just struggled dramatically. We've had some strength on the oil, which is obviously driven CAD obviously driven euro down. So waiting for a bounce basically on this one. Just first position on that one though. So early doors. Pound CAD, same sort of thing. Excuse me. First entry was on this morning on this one, I think. First entry this morning on this. So H1 RSI extension this morning. First reverse alert went in. Since then, boom, come down. Obviously, oil, Canadian dollars rallying off the back of the oil move. So we might get some, we probably will get some extensions on ADR on these today. So that's pound CAD. Again, hourly extension. Nice extension on that one. Got extended this morning, pushed up, pushed back down again. So we've got divergence there as well. Today, intraday, and the pound odd, very, very similar. Very nice extension down there. We come to a beautiful support level potentially, which we bounced off of on Friday, and we've just come through that again this morning. So this level here is a very nice potential support area, and that's within ADR. So if we don't get the bounce out of that, we're coming down into balance somewhere between 100 to 150 ADR, back down to the previous week's lows down here. So that's basically just going to put in kind of a very uneven A-shaped recovery, basically. But loads of propulsion gap targets to the upside. Pound is bullish. It did get downgraded at the weekend, but not massively. It's a AA minus downgrade. So no reason why we shouldn't still be bullish on this. If you look at it longer term, it's in a massive uptrend at the moment. We could, however, obviously pull back down into here, which is those weekly lows. by the time we get down into those weekly lows, 72 will have caught up. So we could be looking at a nice 72 bounce. So looks good. Just watching the NASDAQ take off. DAX is going with it. Not sure why the NASDAQ's taken off, but it is. So pound odd and pound CAD. So there's all your hourlies done. So good extensions on all of these. So got buy on that one. So yeah, all looking good for opportunities. 4 hours. US dollar CAD. Well, we've got the pound CAD, obviously. Let's look at that one while we're here. Same thing. Extended. Yep, just waiting for those bounces. Exactly the same analysis for the hourly. Looking for a bounce basically off the 72 or off those weekly lows if it doesn't decide to come back up again. The other option you've got on this one is it could try to put in some kind of weird uneven head and shoulders pattern. Most of those fail. So you'd be looking for somewhere around there for a bounce, which again is going to tie in very nicely with these weekly lows. So either way you look at it, these weekly lows look like the spot to target, which is 150 to 200 ADR. So entry, obviously there, first entry, second entry, maybe 3 entries by the time we get down to there, 2 to 3. Wow. NASDAQ's gone mental. For some reason. Big, strong push on the NASDAQ. Oh, it's trying to do its gap fill. Look. 14557. Run up on the NASDAQ. Right, so that's pound CAD we looked at. 4 hour RSI extension. So just waiting for a pop on that one. Pound odd is the same. We'll look at that US dollar CAD in a minute as well. So pound odd, we looked at this one on the hourly. Pretty much the same analysis as that one. So pound odd and pound CAD. Same thing. US dollar CAD, that's extended on the 4. So we got the bounce basically off of the previous week's low. So that's last week's low now. That's previous week's low. We got a huge propulsion move on this, basically, off the back of that oil movement. So the news this week, we've got 2. There's obviously a lot of news this week, but the 2 main things we've got to focus on this week are the Canadian rates on Wednesday. And then at the end of this week, we've got PMIs this afternoon, which obviously, this afternoon, which is going to potentially move the US dollar. But the main mover for the US dollar is probably going to be the unemployment claims on Thursday. We've got then the unemployment rate on Friday for the Canadian dollar. So these 2 are both leading fundamental indicators. If you look at the key fundamentals, we're looking at interest rates and unemployment as being the key drivers. So both of those coming out for the Canadian dollar this week. So this has got a lot of potential volatility coming up. We don't know which way it's obviously going to go. It could go either way depending on what happens with the rates. And even if we do get a positive rate increase, it doesn't mean that we're going to get positive movement, as we've seen from the euro and the Australian dollar and the New Zealand dollar, rather. They came down, flying down on a positive rate. So not necessarily guaranteed that we're going to get any good movement off of the Canadian dollar. But you can see where the support resistance levels are. It's a pretty simple thing to trade at the moment. It is completely range bound. So we've got previous month's low and the month before. We've got last week's low there, which we're just bouncing from now. So it's either going to bounce from here, come up and retest these monthly highs, or we've got these monthly lows coming up. Failing that, we've got the previous ones here, another one there as well. So if we do drop, we've got one position long on this at the moment. If we do drop, we're looking at somewhere around 175 to 200 ADR for the monthlies. And then failing that, we've got roughly half an ADR to go down to something else as the next support. So loads of support to the downside. Upside wise, obviously, it's exactly the same story. Targeting there. And then we'll be looking at these highs basically for moves back down again. So range bound on this. There isn't any reason really that we should come out of a range on it either. If obviously the oil completely flies, the CAD might get a bit of an advantage. But don't forget, there's a massive export of oil from the US as well. So, you know, when you're trading these two together, normally if you're trading something against Canadian dollar and the oil rallies, the CAD has a distinct advantage. In this case, it doesn't. So this thing could go either way. But if it continues to stay range bound, as you can see on the chart here, just keep trading it in any direction you like. So got some longs in there, some shorts there, another short there. I'm in a long now. So you just take it long and short all the time. It's continually bouncing around like this. If you look at the buyer scorecard, the US dollar CAD was a long, wasn't it? Yeah, it's range bound now. So it was ever so slightly a long. It's now range bound. COT is still massively long on this one. So the bias is a long, but the bias is a long based on US dollar not going any higher with interest rates. Or continuing to go higher with interest rates rather. So I don't think that's going to happen. So I'm not sure this COT bias really is going to hold for much longer. At the moment, retail are longing it. So therefore it is a short from that perspective. So there is potential for this to come down a little bit more, I think. If it does, it does. That's fine. If it goes up and gets out, brilliant. If it doesn't, it's just a scaling opportunity down there to get out later. So that's nicely extended. We covered those two. Euro CAD we've also already covered on the hourly. So same thing, 4-hour RSI extension. That's nicely extended now down below the 80. We haven't been down there for a while. But below the 20 rather. So last time we were below it was down there, that pullback. We've had plenty of touches on it. On there. On there. Kind of turned into that. That's where we are now. Yeah, euro expected to strengthen up. Canadian dollar moving on oil. Obviously, a lot of news on that. Be nice to get out of this before the news comes out on the Canadian dollar, but see what happens. Euro's just really got nothing at the moment. Really struggling, the euro. Even against stuff that is weak, it's not great. Euro pound just got out of that this morning. So yeah, just no legs, unfortunately. So that's Euro CAD, massive extension. That's the best H4 RSI extension out there at the moment. Euro odd, also massively extended to the downside. Sorry, Euro CAD, Euro odd, also massively extended to the downside. This total parabolic move, as you can see, got two positions. So we've got 2 or 3 on this one. Odd. 2. Yeah. So 2 positions on this one at the moment. Hourly RSI extension obviously was there. That's your first entry. Push down, bit of drawdown control. Second entry taken on Friday. So 2 ADRs basically on this in a row. Looking for a push back up into propulsion. That propulsion gap there is your probably the safest, or rather the best one. So this low, which was kind of almost a double bottom bounce off of this area here, that's the propulsion move that kickstarted that. So a push back up into there would be absolutely ideal. But we've got this propulsion gap target, which takes the 2 trades into profit as well. And this one takes us into profit. That would be brilliant. That one's obviously on the cards as well. So if this is going to be a breakdown and we're going to come back up, that's the sort of movement you would look at. Go NASDAQ. NASDAQ's on a massive bull run at the moment. Not quite sure why. Right. Got a position on it at the moment. That's why I'm interested. Euro odd. So we covered that one. CAD yen extended on the 4-hour. So this was an hourly extension in it already. We've looked at all of these obviously because they're still extended. So CAD yen extended on the 4-hour. Again, all of these yens are going to be 100% reliant on what on earth happens with this US dollar yen. So the rumblings were, oi, stop pushing. At 140, the market went, yeah, all right. they're pushing back up again. So we'll see. It's kind of like testing. It's like, you know, poking a rattlesnake. Eventually, you're going to get bitten. So if this does rally above that 140 level, this is where the initial intervention happened, obviously at 150, and we had the rumblings coming out here. Look, that was the initial intervention, which said, oi, shot across the bow. Then they were like, no. And then it was like, no, seriously, we're not having it. Okay. This was our initial rumblings last week. So if they do push up higher, probably somewhere around about the 145 level would be where I would say that's the max, but I suspect they could intervene at any time on it. So they do not want this going higher, certainly not back up to 150. So with all these yens, anything you're in short on the CAD yen, Euro yen, Swiss yen, whatever yen, or the Oz yen is extended as well. We're just waiting for some movement. If we get any decent weakness coming through on the US dollar, we'll probably find we get a little bit of strength flying through on the yen as well. So we've got some news events coming up this week that could cause that. But nicely extended, that one, CAD yen, very big 4-hour RSI extension. We're just about to get triggered on the 80, almost. So again, same thing. Don't get up to the 80 level too often. There's one there. That's all we've had. But, you know, your extensions below the 80 operate in exactly the same way whenever we get down these sorts of levels. You always get some kind of rally or profit take move. So that's what we're looking for on the CAD yen. Extended. How's this going? I just need to check where this gap fill is. I've got a futures trade on this. The trouble is 14557. It's trading at 14565 at the moment. So futures is different. Can never make it out where it is. There we go. God. Tradeovate with a passion. So I'm just trying to trade on Tradeovate, and the charting system is utterly terrible. I'll leave that to sort itself out in a minute. Right. Sorry about that. CAD yen we're done. CAD Swiss. Oops. So CAD Swiss basically pushing up to the upside. Obviously, 4-hour RSI extension to the upside. Just done a gap fill. So this one's just been completed. We're coming up to the monthly high from 2 months ago. So this is a kind of double top area there. So that, again, is where I would expect some intervention to come through on the CAD yen. On the CAD Swiss. Not intervention, some a bounce. It's been very orderly on the way up, this one. So we've had fairly nice movement. It is still very, very stretched, obviously, as you can see. And again, coming up above the 80 level. So a lot of this stuff is just getting like this, just really extended. We get these big, strong, continuous moves, which happens with the Swiss franc a lot. So at the moment, we're just experiencing massive weakness on the Swiss franc, along with the euro and obviously the Canadian dollar rallying off the back of oil. Perfect storm sort of scenario. So no trades on this at the moment on the hourly. 4 hourly, this is already in. So looking for that to come down at some point. It's just massively extended. So good opportunity to get in. That's the ideal entry. Somewhere around ADR today would be a really spot on first entry. If you're waiting for support and resistance for entries, that's it, isn't it? Failing that, we've got a couple of levels coming up older. But yeah, perfect for shorts up there where we are now. CAD Swiss. Aussie New Zealand. So that's the one that stopped me out. Yeah. What can you say? We're waiting for New Zealand. So some kind of push back down into there. This thing's just still parabolic. The movement on it is so erratic, but it's just not able to get any strength. As soon as we get one bear candle on the 4 hour, it goes, nope, I'm off again. New Zealand dollar just can't rally at all. So news this week, we've got the Aussie dollar rates coming through tomorrow morning. So today is your last sort of chance saloon, really, on this one. If we get weakness on the Aussie dollar based off of those rates being frozen, which I suspect we probably will, Dow's just gone mental as well. US indices being really bought up this morning. So that DAX is obviously out of the pre-market 5. In case you didn't, obviously, if the US indices are rallying, DAX is gone. So yeah, we're out on the 5-minute pre-market. The 5-minute opening range is a breakout to the upside, which is a real shame. If we'd have got that on this morning, such a shame. Couldn't get that on. It's just that move there was just too fast this morning, and I think I had some broker disconnection issues at the same time, so that didn't help. But there's your 1.5 hour. Close position off 1 sec. So yeah, so there's your 1.5 hour to the upside on the pre-market. I mean, you wouldn't have got that level. You would have got that. So that's 2R now on that. But depending if you'd use a stop, you may well have got trailed out on it as well. So tricky one this morning. Not for any reason, that is whipsawy. It's just sheer volume. You're going to get days like this. This is the sort of stuff you can't take into account on backtesting, obviously. You're going to get days where you're just going to miss some of these trades because either the close of the candle is right at the top and then before the execution of orders, it's gone, and you either get that limit order placed, which it goes without you, or you get instances like this morning where it just doesn't work because there's just no volume, or you get broker disconnection. Broker disconnection at market open is actually, I'm finding, quite common on other brokers as well. Now I'm looking more into scalping at the open. You've got such a large volume coming through here. I mean, the volume spike quadruples, and servers just aren't geared up. I don't think some brokers' servers just not geared up for it. So you're going to get, unfortunately, missed orders. So yeah, Aussie dollar, New Zealand dollar, embedded 4 hour. Nothing you could do about this. This Aussie dollar decided to kick into a little bit of life as the New Zealand dollar was waning, and yeah, it's just gone absolutely mental. It's going to come down at some point. Everybody long on this. As you can see, there's been no profit take move whatsoever on this at the moment. So it's just a case of waiting, really. This is kind of just one massive parabolic move. We're going to get a nice profit take on this, either going to be a 38 or a 50% retracement at least, if it doesn't do a complete A-shaped recovery. Just bear in mind, obviously, the New Zealanders put their rates up. Yeah. So New Zealand went up by 0.25%. Aussies are saying, actually, nah, we're not going to bother. That was a really bad Australian accent. I was going to do one and I didn't do one. That's why it didn't come out very well. So the New Zealanders put theirs up, and obviously they tanked the New Zealand dollar for some reason. The Aussies have decided, actually, this time we're not going to put our rates up. Remember what happened last time the Aussies didn't put their rates up? It came down so unbelievably quick. And look at the inflation figure. It's above the New Zealand inflation figure. So New Zealand, not only did they put their rates up to the highest in the market to make themselves the most attractive, and did it because their inflation is too high, and then the market tanked them. The Aussies basically have decided we're not going to do that. We're going to keep it flat, and we don't really care if our inflation's higher than everybody else's. I can't see, if that is going to happen, if they do get that 385, I can't see anything but downside movement for the New Zealand dollar. But at the moment, this market is completely unpredictable. The euro put their rates up, and the market completely tanked the euro, and it hasn't recovered since. So it's impossible to tell what's going to happen at the moment. We're getting to that horrible peak rate area where we just don't know what's going to happen with the market next. We don't know which way they're factoring it in. The other downside we've got as well is we haven't got a press conference from Lowe today, tomorrow morning. We've got the rate statement, obviously, which comes out with the rate, and then Lowe speaks the next day. So there's no one to answer for the fallout that's going to happen tomorrow. So we might find actually on that Wednesday we get quite a lot of movement because answers will be coming out in the press conference there. So it's not a press conference. Where is he speaking? Morgan Stanley. Audience questions expected. Yeah. So he's going to get quizzed as to why did you not increase your rates? You should do. Anyway, so Aussie New Zealand, quite possibly big downside on that this week at some point. So nice area to start selling if you're not already in it. Aussie yen, same scenario. Aussie yen with all the other yens. We've broken out to the upside. There's one sell on this on the hourly extension. We've got a nice level coming up as well here. That propulsion gap. So 100 to 125 ADR today for a pullback back down into there. Nice extended on the 4-hour. Hourly, we've got extended on Friday. So first entry was in there on Friday. At the weekly, last month's high. We're just accumulating around it at the moment, which isn't always a good sign because an accumulation around an area of support and resistance is quite often a continuation. So it could well continue, but obviously we've got those levels we've identified a bit higher up. So yeah, it is bullish at the moment, but there's only so much that the yen will take before they push that all the way back down again. So yeah, Aussie dollar yen nicely extended on the 4-hour, and Aussie dollar Swiss is the last one as well. That's extended on the 4-hour to the upside. So weekly high, monthly high, that level there. So it's all these basically peaks here and that previous low. So support, support, resistance, 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 resistance. If this doesn't break off of this high here and do a profit take back down into propulsion, that's where we should be getting some kind of reaction. Again, also 72. So not far away. It is coming down this morning, though, the Aussie dollar Swiss, if you look at it. We just had the reverse alert on M15. So potentially this could be the point where they're just sweeping last week's high, basically. And we'll start that rally down. So not extended on the hourly. It was extended just about on Friday. But yeah, 4-hour, certainly nice looking short. There you go. That is all of your RSI extensions. Just catch up on the chat. Mr. Lunary, sorry if I missed it, but this one runs with the trend pullback strategy. I don't know what you were talking about then. Don't know. I don't run the trend pullback strategy at all. If you're talking about the VPS, none of these strategies are trend pullback. But you can run it. I mean, it's just a filter. If you want to stay in line with the trend, obviously you can use moving averages to do that. Morning Blue Trader from Pontevedra, Spain. The weather is like the UK, cloudy. No, it's baking hot over here. I got sunburnt yesterday. Went out paddleboarding yesterday. Good fun when it's 20 knot winds. But anyway, went out paddleboarding yesterday. So I put all my sun lotion on when I have a t-shirt on. Yeah, covered up everywhere. Brilliant. Took the t-shirt off. Put the buoyancy aid on. Forgot to do my shoulders. So I've got bright red shoulders at the moment. Ow, which I just touched. Big mistake. Virginia, Germany balance of trade was positive today. Will this help the DAX? Well, that will help the euro, not so much the DAX. Don't read news into indices. Indices are related to stocks, basically. So why is that Zoom not working on this stupid Tradeovate platform? I hate it with a passion. Don't want a new order. No, so basically the DAX will tend to move inverse to the euro a lot of the time. So when you see the DAX pushing up, you usually find that the euro is pushing the opposite direction. So we've had a bit of downside movement on the euro. Now the euro is pushing up a little bit. DAX, we've had a bit of upside. Now it's pushing down a little bit. So it might get triggered on this short on the DAX. We will see. But still quite like that to the downside for that gap fill, the DAX. So we're looking to come back down. Basically, it's yesterday's low, ADR, is pretty much the gap fill. Look. It'd be nice to get that done today. That'd be a lovely ORB to the downside. Get a nice trend on. US indices are dropping quite considerably as well. I was just trying to trade the NASDAQ this morning with the pre-market 5. Because obviously on futures, you can't trade the DAX with most of the prop firms. So I've just started a new account with Take Profit Trader. And I thought I would try and do the opening range break on the NASDAQ alongside the DAX, which worked very nice this morning. So just banks $500. All right. Please take a look at oil. Already done oil. I can do oil again though. But if you want to rewind, I've done it. It's long at the moment, isn't it? It's bullish, but we've got a gap fill to do. Whoops, wrong one. So, little gap fill. Wrong, long even. So yeah, looking for it to come back up into previous high initially. So this was the trade last week. Yeah, remember this was, like I said, we had that symmetrical triangle break last week, long, targeting this area. And then potentially up to $85 a barrel. That's what it's doing at the moment. But whether it will continue to, don't know. But you've got a gap to worry about down there. So I'd be in two minds which way to go on this, to be honest. Whenever there's a gap, you always got to worry because the gaps always get filled. Always get filled. So it's whether or not it's always the same. I can't predict the future. You know that. If I could predict the future, I wouldn't be here, would I? I'd be a multi-billionaire. So it's either going to go up, test resistance and come do the gap fill, or it's going to come down today, do the gap fill, and then come back up and test resistance. There's always a 50-50 shot. One of those two scenarios is going to play out. You decide. Only you can make the decision. Pound CAD? Guys, have you not been in here? Am I just late? Pound CAD. I've done pound CAD, yeah? Someone's asked for it. It's time. You've ruined it. I haven't covered it, so I'm going to cover it. Gold. Gold is obviously US dollar cross. Coming down hard. Big US dollar strength this morning then. No. Okay. Go. So gold's having one of these. So this is a prime example of why I don't trade this. Every now and again, gold just goes without the US dollar on its own and goes, off I'm running. Somebody's selling a load of gold. So the moment this is coming down, as you can see, we're stuck in a range. We looked like we were going to break out of this area, and we did. And now it looks like we're potentially coming down to retest this area. So downside. I've no idea what is going to happen with the US dollar this week. It's really, really open at the moment as to what's going to happen with the US dollar. There's so much going on with interest rates, debt ceilings, you name it, with the US dollar. We are driven by news, and we don't know which way the news is going to take it either. So I can't really say anything about gold at the minute. It looks like it is starting to roll over, obviously. You can see that. But it also had a little bit of a rally there, and it could be looking to push back up. I don't know. At the minute, it's just trying to form a new range. So I'd be looking for buys at the moment if I was going to trade this, but if I was going to trade this, I'd be using a stop loss. So all I would do is basically wait until you get down to this weekly low or last month's low, this area here basically, which is within an ADR today, and buy it. And then target a push back up into that propulsion, or if you're feeling super greedy, all the way back up to there. Stop under ADR would be a good entry. I don't know. There's no news today. Well, there's PMIs this afternoon. So when the PMIs come out later, we're going to get some movement off of this at 3 o'clock. So we'll see what happens there. But there's no other news catalyst today. I don't know whether the market's going to hang around today and just wait for these PMI figures. There seems to be a fair bit of movement going on across the board actually at the moment. So we are seeing stuff. Well, actually, no. Looking at it, it's actually going into a holding pattern. Euro pound. Yeah, massive pound weakness. So the pound is really the only thing today. So I've just got out pound Swiss as well. So there's a couple of pound exits today. So gold, don't know. Never do really with gold, but 0.73 gain now. Euro pound and pound Swiss are the only two that closed out. So euro pound. So that was an entry from Tuesday. Long, bit of drawdown control. Second entry, exit. And pound Swiss. That was 3. So that was that massive move. So that's the profit take move kicking in now on that breakout of the weekly highs. So we had 3 ADRs in a row. So first entry, second entry, third entry, 1, 2, 3 drawdown controls done, and oot. New Zealand CAD, Aussie New Zealand's still not moving, is it? I'm tempted to put this aggressive position on again on this. But actually, New Zealand dollar CAD needs a little bit more attention now. So just firefighting these two at the minute. Don't know if this is the right level to do this at now. Is that a propulsion? I think we're going to leave this. So Aussie New Zealand. So I had this aggressive position on, which obviously stopped out this morning, which is annoying. But average is within an ADR. So I'm not going to put an aggressive on this because it is literally an ADR away to get into a new one on this one. So it's easy to get out of. What I'm worried about on this is a push up into this monthly high, which is just out the screen there. That is where I would put an aggressive drawdown control position on if needed on this one. This has got so much potential for such a massive move back down today, this week rather, off the back of this Aussie rate announcement we've got coming up. New Zealand dollar CAD, again, although it is in 2.25% of drawdown, average is actually only an ADR away. And again, if we get some movement on the Aussie dollar, we'll get some movement on the New Zealand dollar as well. So this has got potential to unravel. We've got the Canadian as well this week. So this is going to, there's a lot of potential for Canadian dollar weakness, I think. I think we've got a good chance of this unraveling this week, this New Zealand dollar, or at least starting to put a peak formation low in and then break that high, get some market structure to the upside. So even if it doesn't go anywhere, hopefully just start to form a range down here if it doesn't want to continue its collapse. And again, there's no reason why it should. They put the interest rates up. Should be bullish. It's the highest interest rate we've got at the moment. There's no reason this New Zealand is reacting like this. It's just market overreacting, basically. Amy, mean reversion strategy. If H1 is extended, can I put the EA on it, or should I wait until M5 is also extended? Yeah, no, H1, your H1 mean reversion, you're trading the H1 RSI. Yeah, so any of these. So like pound CAD, yeah, get in. It's extended. So you basically M5 RSI has nothing to do with the strategy at all. M5 RSI shouldn't even have it on here. Never look at it. M5, M15 RSI doesn't exist as far as I'm concerned. I literally trade H1 and H4. That's it. Your entry is on the reverse alert on M5. The RSI has got nothing to do with it. If you want to wait for the RSI to be extended on M5 and on H1, you can do, but it's going to get extended a lot. That's what it does. M5 RSI extensions happen virtually every day. Yeah, literally every day. You are going to get a signal every day on M5 to go long or short. It's just market movement up and down within ADR is going to give you an RSI extension. So, because the market pushes and pulls constantly. So these low time frames, you know, this a lot of people. There's Telegram groups that have formed off of the back of my Telegram group for people trading synthetic indices and all sorts of things on M5 using RSI extensions and reversal alerts. It's just pointless. It doesn't work. You are going to get signals. It's like taking every reversal alert. That ain't going to work. You're going to get loads of them. So the whole purpose of the H1M5 strategy is that you are using the hourly RSI extensions, because these are slower movements, to identify the market condition. This is a condition indicator. It tells you the condition of the market is extended because it's had a long push. Doesn't mean it's going to do that, or that. It means the market is extended. The reason we use this is because we know after the market gets extended, i.e. the banks have made a move, they need to take profit on that move. So we are waiting for the M5 reversal alert to tell us that they have started a move to the upside. There's been a shift in structure on a lower time frame. Therefore, if we're extended on this time and the lower time frame is starting to move the other way, we're expecting that to be the start of this to move the other way. Yeah, the profit take. So you don't need the RSI on any other time frame. Should really take it off when I'm looking at M5. I mean, this just doesn't. It's not used at all on any time frame but hourly. Yeah. And this one is only used on the 4 hour daily. Don't really need it on the daily. There you go. There you go. That's nice and neat, isn't it? Don't need it. We're literally all the lower time frames are literally for reverse alerts. They're for signals. Yeah. So all we're doing is we're waiting for the hourly to get extended, and then we're literally saying as soon as you see any signs of sellers coming in, because we're extended to the upside on the hourly, let me know. I'm going to get in short. Yeah. That's what the reverse alert indicator is for. It's there to signal and tell you that it looks like the sellers are stepping in. If we're extended on the hourly RSI, this is possibly the start of the profit take move. We never know, obviously, do we? If we knew that, we would be billionaires, but we're not. Well, I'm not. Not many people are, I suppose. I think the EA that just fills gaps would be good. I think an EA that just fills gaps would be good. Could do. How would you get in though? In my opinion, that's the same as an EA that trades opposite to sentiment. Yeah, we know that when retail sentiment goes one way, the market goes the other way. How do you take advantage of that? We know when there's a gap, the market tends to fill it. How do you take advantage of that? Look at the DAX, right? I'm gonna have to go out a fair way on this. Look at this gap fill. Yeah, that's where we're going because we've got a gap there. We've also got a gap there. When are we getting there? How are we getting there? How are you entering to get this gap fill? So how many positions have you got on now? See what I mean? Yes, gaps get filled. You'd have to have a stop loss based strategy on it. But again, if you're going to use a stop loss based strategy with a gap fill, for example, this gap here, when did you take the stop? When did you take the entry? Where was your stop loss? How many times in that 3-day period did you get stopped out before you got that trade on that filled that gap? Was the gap fill risk reward high enough to pay for all the stop outs you got there? It's another stop loss based strategy. Stop loss based strategies are very, very difficult to make work. I don't know. If you can come up with a way to trade them, let me know, Darren. I've looked into it, and I know that 78% of gaps get filled within a week. And I know that a large proportion of gaps get filled within a day. That doesn't give me an edge. I know that within an hour and a half of price movement on the indexes, it's normally reached its peak formation high or low for the day. Doesn't give me an edge, though. Just means that I know for a fact that with 90% accuracy, after an hour and a half, that's probably the low or the high. I don't know which one it is. Doesn't give me an edge. I've got statistical data that says that gaps get filled 90x% of the time and 78% of the time within a week. Doesn't give me an edge, though. When do I press the button? Timing. Go back to the boot camp. Timing is the one thing you can't do. So although I know gaps get filled, that is no different to trading an H1M5 mean reversion. So DAX, for example, we got a gap fill. Yeah. If it's going to push away from this gap, wait for the RSI extension, take an M5 reversal, and then target the gap. I don't know if it's going to continue to do that. So basically, it's a position trade. You're going to get into position trades against gaps anyway, just by H1 RSI extensions, ADR reversals, etc., etc. Gaps are great for targets, look. Yeah, but how did you trade that? When did you trade it? Do you know what I mean? It doesn't. The fact that we know they get filled is like saying the sun comes up in the morning. I know that. How do I predict what time it comes up? I need some kind of device to time blah, blah, blah. And we've invented watches and things. We haven't invented anything that can tell us the timing when a DAX gap fill is going to be achieved. That's the problem. We can go for them every day. So you've got to keep your risk reward. So, I mean, what you could do, I guess, is if there's a gap and the gap is less than 5 days old, this might be a strategy to test, actually. If the gap's less than 5 days old, if the market is pushed up by a minimum of a quarter of an ADR, take a reversal alert short with a stop loss above the high. Do that every day. One day, you're not going to get your stop hit. Hold that trade. That would be my strategy on it. You're probably going to get stopped out. Again, but you're going to get stopped out however many days pass before that gap gets filled, aren't you? So yesterday, Friday, you stopped out. Today, you've probably had a reversal alert on M5. Not yet. So you'll be taking a short there, 55 pip move stop, and 158 target. You might need to hold it for X. That's not a bad looking strategy, actually. There you go, just came out with that live on air. But you've got to put a time limit on that gap. Yeah, because we got one from, I don't know how old it is now, months ago. Not months ago, weeks ago, many weeks ago. So that is 29th of March. We're in June. So you've got to draw the line somewhere. I mean, that is rare. But look, I mean, if you go back, do the testing on it. And I can build an EA to test all this, but that one there, 1, 2, 3, 3/4 days, depending on whether you targeted that or what you targeted, what part of the gap you targeted. But So that one took 3/4 days. That one filled same day. That one didn't get filled. That one, as we know, didn't get filled. That one got filled same day. That one got filled same day. That one got filled same day. That one filled same day. That one filled same day. It's very small though. That one filled same. That one filled same day. That one filled same day. That one filled same day. That one took 1, 2, 3 days to fill. That one filled same day. That one filled same day. This one took 1, 2-ish stroke. Yeah, it's 2. We had to wait for the overnight to get the proper fill. So 3 days. This one, hence why I'm leaving the short play on the other account, is ripe, isn't it? So, but it could push. So you need a rule. But again, all this can be back tested. So we need to leave the gap for X number of days. Also, you're going to need a broker that shows the gap. Yeah. So, or I mean, we can simulate this. So we'll have to set an end time on a Friday and a start time on a Friday of 7 a.m. on a Monday, or rather on the next day. So market start time is 7 a.m. Frankfurt, 9 a.m. broker, and whatever the end time is. So we'd have to set that up. I can build something to test that. But I suspect what you'll find is there won't be an optimal setting, because the ones that don't get filled. And what do you do also if there's a gap in both directions, which can happen? I don't know. You think about it. There's a strategy there somewhere. But, you know, there's I've got so many strategies that work. I can't trade everything. You know, at the end of the day, you got to stick to something. But we can test that. Morning, Brian. Morning, John. Morning, everybody else. I like my like. Thanks for sharing your view on the market. I like my like. Okay. Mr. Lunary, kudos. Right. Anybody got anything else I want to look at? I've covered everything this morning. Pretty short one this morning, but we've got no ADRs. It's the first day of the week. All the RSIs we're still in. Bank to load, which is good. Opening range breakout isn't doing particularly much at the moment. We've had the ORB to the upside. Very big ORB, so not particularly conducive to making money this morning, although it does look like it wants to go long again, DAX. Yeah, haven't really got anything else to cover this morning. I'm going to be back at 2:20 this afternoon, obviously, for the New York session. We will trade New York as usual. Morning, Alan. I'm just about to go. So we'll trade New York as usual. See how that gets on. Be aware today we've got the PMIs at 3 o'clock. So there is a good chance that we will get a fairly lackluster open this afternoon. The NASDAQ's gone a bit crazy this morning with the DAX as well. So it might be a case of we haven't got a lot of volume left, but we'll see what happens with that NASDAQ. It's really starting to roll over a bit now, but that quite often will mean we get a fairly whippy open. So today will be a good test for the pre-market opening range EA to see how it handles today. But yeah, 3 o'clock this afternoon. And then obviously got to worry about tomorrow with the Aussie dollar. So anything you've got on Aussie dollar related, you just need to check what you're going to do with it, because obviously there is a high probability of an ADR plus hit tomorrow morning on the Aussie dollar. That's starting to push up again. So it would be good today if we can get up to that monthly high here, which is ADR. So if we get up to ADR and we get a reverse alert, I shall take an aggressive drawdown control position up there and hope that it gets down to here somewhere. Not that that helped me this morning. Look, they spread it by pretty much an ADR, but and hope that I can get a decent stop on it, but we'll see. We need to get there first. It might not even break that high from last week. We might just drop from here, so we'll see. Anywho, spam that like button. Good one, ZK. Yeah, anybody need anything, let me know. I'll be in Telegram. Other than that, I'll be back this afternoon, 2:20, back tomorrow morning, 7:50, same time for the Frankfurt session. But hopefully you have a good day, and I'll be back for this afternoon, and yeah, see if we can milk the US markets this afternoon. All right, so have a good one. I'll see you guys later.